Hi there, it's Rick on Tesla, and today we're going to be looking at the best option for financing a Tesla through a UK limited company. We'll be looking at three options. Number one will be buying it outright, number two will be leasing, and number three will be the PCP option. So I've created a spreadsheet for all three options, compare and contrast them, but I've got to get my disclaimers in there. I am not a financial advisor, I'm not an accountant or a tax expert. I have had this spreadsheet looked at by two separate accountants / tax advisors, but as always, this is not financial advice. Please get your own advice from your own accountant for your own set of circumstances. So I'll leave a link in the description below to a place where you can download the spreadsheet. Okay, so without further ado, let's have a look at the spreadsheet. Don't be alarmed, it's quite a big spreadsheet, but hopefully it makes sense, hopefully it helps you out. So on the left here, we've got the buy outright option. On the middle in green, we've got the business contract hire, and we've got the PCP stuff over here on the right. So this is based on a Model 3 long range, and this is the one that I selected, and based on the ownership of 3 years, ownership period of 3 years. So I picked the long range, the red coat, and it's just the standard wheels. I did pick the white interior, the premium interior, which comes out 51,690 before savings. Then you've got these options in here for if you're going to buy it in cash, PCP, business contract hire, or hire purchase. There's in here when you toggle and change the amounts, as well as some of the actual quotes I've got from ALD Automotive off the back of this as well. So in case you don't know, ALD are the preferred finance provider for Tesla at the moment. You can of course arrange your lease separately elsewhere with a different finance provider than ALD and just tell Tesla that's no problem. However, when I looked at the quotes, there was very little in it, and I felt it was just better to just stick with ALD. I'm talking like a couple of £100 difference over the entire period, and feel like you've got more control when you're dealing directly with Tesla and their preferred finance provider. Okay, so let's start with the buy outright option. We have got the vehicle purchase price in there that we've just seen, so 51,690. Now VAT reclaim 0 is in there, which is disappointing. So according to the accountants, you can only reclaim VAT if the vehicle is used 100% for business purposes, so not 1 mile done personally, which in my situation couldn't justify that. And I think you have to provide documentation on that as well. That's what my comment said in there from the meetings with the accountants. Corporation tax, we can reclaim the 19% of that. So that is the bulk of the tax savings there. And then the benefit in kind is worked out as 1% this year. So I'm filming this in June 2021, and then it's going to go up to 2% next year. And that will depend on whether you're a higher percent taxpayer or basic rate or what have you. Okay, so as this is based on a 3-year ownership period, then we'll look at the value after 3 years, and according to Drive Electric, if I bring this over here, the Model 3 long range has got a 57.91% depreciation value after residual value after 3 years, or 36,000 miles. So plug that into the spreadsheet. There's our 57.9, so buying it 51,690 and selling it for just under 30,000 3 years later. Now, this is something that I don't think some people will be aware of or take into account, but the corporation tax that you claimed in year 1 off that big fat purchase price, you are going to have to give some of that back to HMRC. So you're going to have to give back the 19% of the sale price. Okay, bad news, but there we go. So that gives us the total costs over 3 years. It's the purchase price, benefit in kind, minus what we've sold it for. And the amount that we've saved in tax will be the corporation tax we paid at the start, minus the clawback amount, which gives us a grand total of 18,661. Obviously this can go up or down depending on a number of factors, so you'll want to factor that in yourself, but just showing you what I've worked out and where I've worked it out from. Alright, let's move on to the business contract hire now. So there's different options here. We've got 5 different options, right? So this is the 3-month deposit for ALD, all these based on 36 months by the way. 3 months, 6 months, 12-month deposit, okay, for 8k mileage a year. So I worked out my mileage over the last 5 years from my current car, and it came out about 7,200. Taking into account coronavirus, maybe slightly higher, going forward, depending on the coronavirus, etc. But for me, that 8K mark was about right. So this is the difference if you pay a 3-month deposit, 6-month deposit, 12-month deposit, as to what the figures add up to. And then these are the differences based on a 12-month deposit, but the different mileages. So 8K a year, 10K a year, and 12K a year. Right, so let's just take a look down these and I'll explain my understanding of it. So we start with the rental excluding VAT, and these are taken from the Model 3 financing page, and again these may change due to APR and the different finance providers, but correct at the time of writing, June 2021. You've got the rental excluding VAT, then the VAT based off that rental, then the total rental including VAT, the deposit in this case is 3 months including the VAT, so that's the cost of the lease across the full term. I then said, right, well, we can work out the monthly average and deduct the corporation tax on a monthly basis going forward. That's the corporation tax calculation there. And then we've got the VAT reclaim, which we're allowed to reclaim half the VAT, and that gives us like a monthly net going forward. Benefit in kind is the same throughout, and don't forget to reclaim 50% of the VAT on the deposit. And then that gives us total cost over the 3 years of the full term plus a BIC that we've paid, and then the tax savings that we've managed to knock off, the corporation tax, the VAT reclaim on both the monthly averages and the deposit, which gives us the net total of that amount there, so about 20,000. Okay, so onto PCP, we've got the different deposit amounts at the top. And this is based on a 10,000 annual, so you'd be probably best to compare it with something like this one if you're comparing the PCP to the lease, because you can't get less than 10k annual on the PCP on the website, at least on the Tesla estimator. Right, so the deposits go up this way from 5, 10 to 15. So let's just take this first column and we'll say, right, the down payment is the deposit we're going to make. The monthly payments are taken from the Tesla website. So our total monthly is 36 payments of that. So the total we will have paid pre-balloon payment is the down payment plus the total monthlies. Then we've got our balloon payment, which is there on the Tesla website. So in total, for our £51,650 vehicle, this is what we'd be paying over that term for the PCP option. Now, this monthly average is not what you'd be paying each month, but it's the total paid including the balloon payment split over those 3 months. So these monthly averages are based on dividing the total paid including the balloon divided by 36 months. So if we want to work out if we actually didn't go ahead and complete on the balloon payment, just remove that, and this would give us a better monthly average for comparison. But then we've got the corporation tax, which we can deduct from that, and we've also got the 50% VAT reclaim. We can then figure out our monthly net payment from that. The same BIC applies, and we mustn't forget to deduct the VAT reclaim for the deposit as well. Okay, so if we didn't go ahead with the balloon payment, that would give us a total cost over 3 years of the 31,000 plus 1,000 here, giving us a 32,161. Our tax savings over the 3 years of the corporation tax and the VAT that we've reclaimed, giving us these net totals. Okay, let's zoom back out and take a look at the different options that we've got. The cheapest PCP is 21,634. Our cheapest lease is 20,315, although if we're really comparing it like for like, it's a 10k versus 10k annual mileage, so it's about £900 cheaper for the lease. And then we've also got the buy outright. So for me, I think we can knock out the PCP option and say, right, we're going to forget about that because it's almost £1,000 more expensive. You're going to have more of your money tied up to start with and for longer. So I think it's really just between the buying outright and the lease option. Okay, so no surprise that the buying outright option is cheaper than the 3-year lease option by about 1,600 quid. However, I would say that there's a couple of risk factors in here, namely the valuation after 3 years. So we know the depreciation figure right now is at 57%, but it could, after 3 years, Tesla could have made better vehicles, it could be more competition, there could be better hardware, better batteries, longer range, etc., which means that the actual amount you get back and it's worth in 3 years could be less. If that was down at say 26,000, then all of a sudden it looks very different, but that's what the figures are at this moment in time. So again, that's something for you to weigh up. Okay, so now let's have a look at the buy versus lease and invest approach. So as opposed to having the car sat there on your drive and the value of it depreciating over time, better to maybe have the money just going out monthly on the lease and to invest the remainder of the money that you would have put into your car into some sort of investment that will yield you a return, a positive return rather than a depreciating one. Again, these are my numbers, they're rough, the back of the 5 packet sort of stuff. Here we go. So we've got this much cash tied up in the car once if you were to purchase it outright. So that will be the purchase price 51,690 minus the corporation tax. Let's not forget about the corporation tax clawback as well. Now, cash spent on the lease every year, that will be the lease that we selected divided by the 3 years. So that's going to drip in there. There's 6,772 each year. Now, obviously there's a deposit at the start, but then after that it just goes down to the monthly payments. So if we started with a pot of 51,690, then we're going to have quite a chunk to keep invested, and we'll lose a bit of the deposit at the start, but then after that it will just be a small bit that's going out. Therefore, I'm saying remaining cash to invest year 1 is going to be the purchase price minus the year's leasing costs. It will be higher in year 1 because of the higher deposit and stuff like that, but this is why it's back of the 5 packet. Hopefully it illustrates my point and why I'm thinking of doing what I'm doing. So remaining cash to invest year 1 is this 44,000, taking a yield of, what's this, 9%. Now that's based on putting that in an index fund like the S&P 500, which over the past 100 years has yielded, I think, 10% or just short of like 9 or 10% annual growth. No guarantees it'll do it going forward, but past 100 years isn't too bad a stat, to go off. That will yield a £4,000 profit, that return on investment at the end of year 1. Again, it could be 20% year 1, it could be minus 10% year 2, we don't know. But I'm just going off what the averages are. So cash to invest year 1, that much gives us close to 10% there, £4,000 profit. We can then reinvest that profit as well as we're investing, but we're going to lose another 6,700 for year 2. So that will give us another profit on there. So that will give us another profit for year 2. And then finally, year 3 will be much the same. Again, we can add the profit that we've got and that kind of compounding effect, although we will be losing 6,772 on the lease payments itself, which will give us a total profit over 3 years, if everything goes hunky-dory, which it may or may not, of just over 11,300, which far outweighs the 1,654 that we thought would be cheaper at the start. So for me, the profit over the 3-year period, alright, it might not all go great, it might go wrong, but even if it went wrong and it was only, about half that, then it's still way better than if you'd have just sunk it all into the depreciating assets sat on the drive. In my opinion, everyone's got their own opinion, but there you go, that's the breakdown of that. But everyone's different, everyone's appetite for risk is different, ownership of vehicles versus leasing feelings is different, so you just do what's right for you. Okay, hope that helped you out. I know it's a bit of a monstrous spreadsheet, but I've done the research, I spoke to the 2 separate accountants for it and figured it would be useful for somebody else out there. So if you are considering buying, leasing or PCPing a Tesla and you found this information useful, then please consider using my Tesla referral link in the description below. That will give you 1,000 supercharger miles, and it will also give me 1,000 supercharger miles, which I'll be most grateful for. If you've got any comments, questions, clarifications, or anything like that, then please leave a comment below. Also, please comment on how you think you're going to buy your Tesla, whether it's purchased outright, a lease, or a PCP. I'd love to hear in the comments below. So what am I going to do personally? Well, not surprised, I'm going to go for the 3-year lease with the 8,000 annual miles. And with the money that I would have spent on the car itself, I'm going to take that money, the 51,690, and I'm going to put all that into Tesla shares themselves and see how that materializes over 3 years. You probably think I'm crazy, but I've done my research. I believe there's a huge amount of growth potential in Tesla for the next 3, 5, 10 years. You know, if you'd have invested in 2019, instead of buying a Model 3, you could have bought 10 Model 3s 3 years later. The growth may have already, finished. It may be reaching a plateau. It may be coming slower than that. I don't expect to be able to buy 10 Model 3s in 3 years' time, but I do think the price is going to go up, and I do think the company is a great company to get behind. Having driven the cars, I think that they are so futuristic, and the way that the world is going to go, and these guys are leading the forefront of that. So I'll put a link here to the video of me actually buying the shares, and I'll also be doing quarterly videos to show where I'm up to with the share price versus what I bought at. I've got a separate spreadsheet for that, obviously. So yeah, if you want to come along for the ride, then please subscribe, hit the bell notification so you can see these quarterly updates, and I'll also be carrying on with my usual sort of Tesla videos as well. So yeah, hopefully that was useful, and I'll see you in the next video.